It's Thursday, the 15th of December. We're on the Australian dollar, US dollar, and I have just entered into a long position after this candle right here at 11.40. As always now with the live trades, if you want to see the morning analysis on this market, so the reasoning behind the zones, and the way I analysed the market this morning, just watch the review video of the same date on the YouTube channel, so Thursday the 15th of December. Okay, so I was basically looking for the market to either press up this morning or press down before I would be interested in getting into a trade. In all honesty, I would have preferred the market to spike up this morning, so I could have gotten into a sell position. Yesterday, the rate decision coming out of the US, interest rates were increased, which basically drove the Australian dollar down against the US dollar. So it strengthened the US dollar. Now, the sell came from key levels in this market. So basically, the levels we've been looking at in the Sunday analysis videos for a number of weeks as the area of resistance where we could expect sellers to get back into this market in a strong way, looking to continue the downtrend. So basically, after the rate decision, the market has dropped down quite significantly, and there has been very little pullback. This morning, what I was looking for was either early morning pullbacks to get into the sells, or for the market to come down into a key support level where I could buy into this market on the expectations of sellers taking profits, driving the market higher, and also buyers stepping in on the back of expectations of there being that pullback. So I got my entry right here at 11.40. The market has came down relatively strongly into the zone, which for me just means be a little bit careful when in the trade. I will be watching for early strong reactions and signs to get out of this trade. If I see them, I may just step out of the trade for 1-2 points break even, or even a couple of points loss. That's what my trading plan tells me to do, so that's exactly how I will manage this trade, because it is counter trend. The trend on this market is down. So what am I looking for from this trade? Well, I want to see how the market reacts up at these levels here, if we can get up here, with anywhere from this level all the way up to here being the target for the trade. And as mentioned, my entry is right here. Very tight stop on this one. Let me just mark it in. It's actually just sitting round about here. The market comes down there, I will exit this trade quickly for a loss. Good thing is when you get into trades with very nice tight stops like this, 10-point stop, it means your risk to reward can be very good. So risking 1% on 10 points, the management point takes it up to around about 12.5, 13 points, and potentially all the way up to 18 points, depending on how this market reacts. So what I will do, guys, is I will pause the video, cut the video down before I publish it to YouTube. And all I'll do is I will turn the video back on whenever the market is making a move, whenever I am managing the trade, making any decisions, and I will talk you through exactly what I'm doing and what I'm looking at. Okay, so we can see the market has shown rejection as expected, and it's relatively small. This candle here, I really want to see how this candle now closes before I make any decisions on what to do with the trade. But this being a counter trend trade, after the strong move down like this, this is one of the main ways I guess you could say protect yourself in these sort of trades. It's really simple. I don't understand why a lot more people don't do it. If the trade is looking like it's coming against you, it's giving you all the signs that it is, you can exit that trade at break even. All you need to do is click exit. It takes you out. You don't lose any money. You don't make any money, and your capital is protected. It's such a simple way to protect your account. you don't need to get into every trade and be correct on every single trade. It doesn't need to make your target that you set when you first get into the trade. Once you're in the trades, on the lower time frames, I always say this, on the lower time frames, it's a lot more difficult on higher time frames because you can't actively manage a trade on, say, the daily time frame. You'd have to sit at your computer for 2-3 weeks. I don't even know how much caffeine you'd have to stay awake for that amount of time. But on the lower time frames, you can watch the trade, you can see what it's doing, you can see how it's reacting, and you can make your decisions based on the price action. Okay, so we'll see how this one goes. I would like to see another fairly clear rejection candle before I got out of this trade. So let's see what happens. Okay guys, we've just popped up into the management area / target. So we're just watching the trade now, looking for an exit point. It will be within here somewhere. Just seeing how this market reacts now that it has pressed up. Okay, so I've exited the trade at 1.5 to 1 risk to reward. So basically I've made 1.5% on account. 5, 10, 15, 20, 25 minutes, you make 1.5%. Show me another investment that can do that. This is why I love trading. With a rental property, you're talking, what, a month and a half, 2 months, if you've got a property with a very good yield to make 1.5% on your investment. In a bank with your savings account, with interest rates so low, it's not even worth thinking about how long it would take. So, very nice trade. Now, what can I go over just quickly? Let's step into, we'll just call it James's lesson corner. Too many people I see coming to trading, well, first of all, they either don't have a trading plan or their trading plan is so simplistic that they may as well not have a trading plan. A lot of people I speak to and see, their trading plan is something like plot your support and resistance. If you get a pin bar or an engulfing candle at those areas, enter a trade. And then after that, it's just a wing and a prayer what they're doing after that. They're just looking to make profit. They don't know where they're looking to get out of the trade. They don't know what they're looking to risk, what they're looking to make, what to do if the trade moves against them, etc., etc. The best way I can describe it is to think about it in terms of any other industry. So let's take a pilot as an example. Let's say you're talking to someone, they tell you they're a pilot, and they start talking to you about what they do with their job, and they say basically, my job is make sure the plane takes off, I fly to the destination, and I land the plane. So that's basically you plotting your support and resistance, getting into your trade, exiting your trade for a profit. And then you say, you start talking to this pilot a little bit more, and you say, well, what happens if you have an engine failure? And the pilot says, oh, I have no idea. And you say, well, what happens if you have an electrical fire on board your plane? And they just look at you blankly. What happens if some of your passengers start fighting on the plane? They start trying to break into the cockpit. And he just shrugs his shoulders. Would there be any chance you would get on a plane with that guy flying the plane? I'd like to think not. And it's the exact same if you're going to step into any industry. Trading is no different. If you're coming into trading, you have to have a proper trading plan. It has to cover as many eventualities as you can think about. Because you need to know what to do. The worst thing you could possibly do in trading is try to wing it. Because when you're trying to wing it, invariably you are basing it on emotional decisions. If you're basing it on emotional decisions in trading, you are going to make the wrong decisions. Yeah, you're just human. It's the way we all react. If I was doing it, if I was just basing on emotional decisions, I would still be where I was when I first began as a trader. Just basically, signing checks, handing them over to the broker, watching my account become decimated, and not having any idea what I was doing. You need to have a trading plan. Then you need to have the commitment to learn the trading plan. If you want to become a trader, that's the best advice I can give to you guys. You have to have a proper plan before you get into the markets. It can't just be such a simple plan as, I'm just going to look for buy and sell positions. You need to have more in depth. You need to know exactly what you're doing, because it removes the emotion and it allows you to trade effectively. Okay guys, so that is the trade. Very nice trade. 1.5%, 1.5 risk to reward. That will be me finished for the day. It's just coming up for 12:15. Next week there will be reviews, and then after that I am breaking for Christmas. So I hope you all have a good Christmas if I don't speak to you before. As always, I'm James Orr, and thank you.